Hi, I'm Garth Drinkwater from Small Business CGT Concessions Specialists. In this video, I'm going to talk in a little bit more detail about the 4 concessions. They are the Small Business 15-year exemption, the Small Business 50% reduction, the Small Business retirement exemption, and the Small Business rollover. In order to access all of the concessions, you have to satisfy some basic requirements. And specifically, to access the Small Business 15-year exemption and Small Business retirement exemption, there's some additional requirements which have to be satisfied. These will be covered in separate videos. Let's first look at the Small Business 15-year exemption. Now, this is the best of the concessions. Where it applies, the entire capital gain can be exempt. Not only that, where the capital gain is made by an interposed entity such as a company or unit trust, the cash can usually be distributed from those entities without any additional tax. In order to access the concession, the CGT asset has to be owned for at least 15 years. Also, there has to be an individual who is either 55 years or over and the capital gain arises in connection with their retirement, or the individual is permanently incapacitated. If the capital gain is made by a company or a trust, then that individual has to have a 20% interest in the company or trust. Also, there has to be an individual, whether or not the same individual, and it can be different individuals over time, who have a 20% interest in the company or trust for at least 15 years. There are also additional requirements in relation to choices, documentation, notification and payments, including the timing of when these need to be made, prepared or lodged. The second of the concessions is the Small Business 50% reduction. Where this applies, the capital gain is reduced by 50%. This is after the up to 50% discount for discount capital gains if that is otherwise available. There's no extra requirements that need to be satisfied to access the Small Business 50% reduction. You just have to satisfy the basic requirements. The third of the concessions is the Small Business retirement exemption. Where this applies, the capital gain can be reduced by up to $500,000 for each individual that has a direct or indirect interest in the asset of at least 20%. And again, this is after the up to 50% discount for discount capital gains if that is otherwise available. Using the Small Business retirement exemption, you can in most circumstances eliminate the capital gain entirely. The amount of the capital gain that is reduced using the Small Business retirement exemption can be distributed from group entities such as companies or unit trusts without any additional tax. However, depending on the individual's age, the amount may have to be contributed into superannuation. Other than the basic requirements which have to be satisfied for each of the Small Business CGT concessions, there are specific requirements for the Small Business retirement exemption. The first of those is that the gain cannot be reduced by more than the individual's CGT retirement exemption limit, and this is a $500,000 lifetime limit. There's also a requirement in relation to superannuation. If the relevant individual is under 55 years of age, the amount of the reduction has to be contributed into superannuation. If they're over 55 or 55 years and older, they don't have to contribute the amount into superannuation. Also, if the capital gain is made by a company or a trust, the relevant individual has to have at least a 20% interest in the company or trust. There are also additional requirements in relation to choices, documentation, notification and payments, including the timing of when these need to be made, prepared or lodged. The last of the concessions is the Small Business rollover. Where this applies, any residual capital gain can be deferred by at least 2 years, or longer where a suitable replacement asset is acquired. And now this is after the up to 50% discount for discount capital gains if that was otherwise applicable. Where a suitable replacement asset is acquired, the capital gain can effectively be deferred until that asset is either sold or ceases to be suitable, which broadly relates to when it's no longer an active asset. So in some cases, this deferral could be indefinite. There are no specific requirements which have to be satisfied to access the Small Business rollover. You only have to satisfy the basic requirements. But in order to get that deferral for longer than 2 years, the asset has to be an active asset, which basically means it's used in the business of either the taxpayer or a connected entity or affiliate of the taxpayer. Where you do buy a suitable replacement asset, but the cost of that replacement asset is less than the gain you're trying to defer, you can only defer the amount of the cost of the new suitable asset. Any shortfall is still realised in a capital gain. If you'd like to know more or would like to get in contact, head on over to our website.